Hello and welcome to the Loan Officer Sales Training with the Mortgage Calculator. Today we're going to go through a sales training on identifying problems. We'll get started in just a minute here. Let us go live on all the different platforms and give everybody a chance to jump on. Appreciate everybody tuning in nice and early. Remember, we do this 12 p.m. Eastern time every weekday where we go through the front end of the sales training. Just a quick reminder that since this is the week of Thanksgiving, we will not be having one of these on this Thursday and Friday because it is Thanksgiving week. But we do have the sales training Monday, Tuesday, Wednesday this week. I see some comments coming in there. Appreciate it. Feel free to keep dropping comments there as you tune in. You can also drop questions as I go through the training here. If you have any questions, you can drop those in the chat as well. So it looks like we're live on all the different platforms, so we can go ahead and get started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and this is our loan officer sales training that we do every weekday at 12 p.m. Eastern Time. Today, we're going to be talking about identifying problems. Now, this is going to be the first part of essentially a three-part series that I have here this week. So today, we're going to be talking about identifying problems. Tomorrow, we're going to be talking about finding solutions to those problems. And on Wednesday, we're going to be talking about actually solving those problems and what to do after we solve those problems. So there's only 3 days this week because it is a holiday week. So the 3 days that we are doing Monday, Tuesday, and Wednesday are essentially a series where we're going to be kind of progressing through here. Now, today's training, it's called Identifying Problems. You could call these, issues or they're not necessarily a problem always. Identifying, issues or hurdles or whatever the case may be. So not always necessarily a problem, but that's what we're calling them here for the sake of the training today. Now, identifying problems is big because what are we doing really as mortgage professionals? Some people might think that we're doing all kinds of stuff, which we are, but at the end of the day, we're solving problems. Right from out the gate, we're solving problems. For those of you that are experienced loan officers, you know that that's half your job is solving problems, right? Especially as we get into the loan, there's going to be problems popping up. Believe that, right? There's hardly ever a loan that doesn't have problems or issues popping up during the process or obstacles that need to be overcame during the process, whether it's in the beginning, whether it's in the middle or near the end, right? Closings sometimes get blown up because of issues, even when loans are already clear to close. So the big thing here is that we want to identify these problems or issues or obstacles that we're going to have to overcome as early as possible. And that's kind of what we're talking about today, making sure we have on our mind what we may need to know, and so that we can try to identify these issues or problems as early as possible. So first thing on my first slide here, identify the problem that the client needs to solve. So right now I'm talking about in general the deal, right? Does the client need cash out of their home? We're talking about a cash out refinance. Or do they need to buy a new home? We're talking about a purchase. Do they need to get a lower rate because their rate is too high? We're talking about a rate in term. Do they need to do a fix and flip on a property and make money, right? That's a problem that we're solving. So obviously the first step is to figure out what the problem is we're solving for the client. You could also call that a need, right? What need are we solving for the client? But as we talk to the client and early on in the process, as early as possible, we need to identify some of these problems and issues. Some of those are going to be credit problems. Remember, the credit score is not all that matters. So many times loan officers just say, oh, they have a good credit score, and that's where it ends, right? But we have to know what's going on. We need to know if they've had bankruptcies, foreclosures, if they have open disputes. This is a big one that a lot of newer loan officers don't realize. You can't close a loan with an open dispute, right? If they have disputed accounts on their credit, we can't close a loan, right? And there's a reason for that. It's disputed. Who knows? They could owe a bunch of money. They're not going to know where, the ball drops out, where it lies at, until that dispute is solved. So you can't really close a loan with open disputes on their credit. Their credit score could be 720 and they may have a dispute open. They could still have a good credit score. Just because there's a dispute open doesn't mean that all of a sudden they have a 500 credit score and you should be looking at, everything. Some people just see a good credit score. That's it. They move on. But an open dispute will kill your deal. Also, the balance is owed. Pay attention to that when you're looking at your DU results for those of you that are doing conventional loans, right? Or just agency loans in general. The DU or LP or whatever it is that you're running may say approved eligible, but it may say that this balance has to be taken care of, right? You can't just look at the credit and say, oh, everything is all good. We have to do a deeper dive. Are there bankruptcies? Are there foreclosures? Are there open disputes? Are there large balances owed? Is DU going to give us a reading that says we don't have to pay those off? Or did DU give us an approved eligible saying that, yes, you would be approved if they paid these off, right? These student loans or, whatever it is, right? And DU or LP or whatever it is you're running is going to make those decisions, but we have to pay attention to it. And again, these are things that we need to ask the client as early as possible. Get right to the point. Do you have a bankruptcy? Do you have a foreclosure? Are there any of accounts that you're aware of that are open with disputes? When it comes to this open disputes, I do want to touch on an issue that we actually just did on our team meeting, a small training on, which is, credit repair, for example, right? Credit repair is not a good thing for somebody trying to buy a home. Credit repair companies, their main, resolve is to dispute every account and see if they can get it taken off, right? Well, guess what? If you have disputes, you can't close a loan, right? So they're not credit repair companies. I would never work with one. You can't ever tell your client that they should work with one. And they're essentially the opposite of what somebody needs to close a loan. They're going to open disputes, which doesn't allow you to close a loan, because for them, they're just trying to improve your credit. So if they open disputes on every account, they could drop some of them, negotiate some of them down. At the end of the day, their only goal is to get your credit score up, as opposed to getting you ready to do a loan, which is what we are trying to do for them. And then next here, also identifying income problems. We should know right off the bat what kind of problems there are with the income. They're W-2, they're looking for a conventional loan, but they've been unemployed for the last year. Okay, we need to know that. We need to figure out which route we're going to go, because you're not going to close a conventional loan with somebody who's been unemployed for a year, right? It's not going to happen. So we want to know these things up front. And again, this comes in our interviewing the client, speaking to them, educating them, preparing them for what's about to come, and making sure that we have all the information that we need to find the correct loan program. So notice I'm talking about this stuff on the sales training, because I'm referring to how to put them into the correct products and how to actually make the sale. Of course, we have trainings on the back end that are about actually running DU and how you would solve that and all this kind of stuff. But right now I'm talking about it on the very front end, as far as sales, being on the phone, interviewing the client, and finding a place where we can put them to where we can actually sell them a loan product that would fit what they're doing. So identifying income problems. At the Mortgage Calculator, we have over 5,000 non-QM programs. They're going to probably need to fit into one of those. If there's some income problems, no problem, but we need to know what those income problems are or issues are up front. That's very key. Now, next here, identify property problems. This is something that goes by so many LOs. So many MLOs just don't even pay any attention to this until an appraisal is done and the entire deal blows up, Because the property has issues. The owner knew that the property had issues, but they just weren't talked about and they weren't addressed by the loan officer. They weren't questioned by the loan officer, right? There's a bunch of properties that cannot be financed. I'll tell you what, here's your first inkling of whether it's going to be an issue for the property type or the property, when the appraisal comes back, issues with the property. If your client is going to buy a property and they say cash only, 99% of the times that's because it can't be financed. You got to really look out for that, especially like personally, if you're buying a home, you already know that. If they say cash only, typically that means that there's reasons that it can't be financed. The property is in some type of condition to where it cannot be financed. Something is not correct. Nobody will loan on it for a specific reason. That's the only reason why people typically put cash only, because guess what? If you put cash only, you're going to get less money. The more opportunities that people have, such as not only could I pay cash, but I could pay financing. If you're cash only, you're taking a bunch of people out of the market, right? If you can be financed, if the home can be financed, there's way more people, way more demand. Now the price goes up. But if you can only accept cash offers, you are very stuck into what you can accept, which means the price is going to be lower. You're not going to get as much for your property. So not everybody's out there just asking for cash, because it definitely will lower the amount you can sell the property for. So if they're saying cash only, it's typically because it can't be financed because of the roof or because of the insurance or because of there's no stoves in the kitchen or whatever. And so it can't actually be financed in any type of traditional financing form, conventional FHA, USDA, VA, all these type of things that are going to require certain things of that property. But the seller is essentially saying those things are not here at this property, so it can only be cash. Well, guess what? You're going to get all the way into this deal and you're going to find out after you've spent dozens of hours, weeks, months dealing with this property or this transaction, and you're going to eventually realize it could have never happened from the start, because there's reasons that that property cannot be financed. So you want to ask if it's a refinance, you need to ask the actual owner. Some of this stuff is just not addressed because it's just not asked. Ask the client straight up, is there any reason why we wouldn't be able to finance this property? Are there issues with the roof? Are there issues with you getting insurance? Are there issues? Just ask them straight up. If it's a purchase, tell the realtor to ask the seller straight up. What is the reason why you're asking for cash only? Or is there any reason this property can't be financed? This goes for the same as anyone that comes to you and says they were denied at another lender. You know what the first thing you need to ask is, if they say they were denied by another lender? Why? What was the problem? What was the issue? Now, at the Mortgage Calculator, again, 5,000 non-QM programs just in-house. That's our in-house programs with us as the lender. Then we can broker anything else. So chances are we can solve the problem, but we need to know the problem. But there's some things that are going to come up that you're just going to go, oh, well, no wonder you got denied. That's not a financeable property. There's nothing anyone can do, right, for that property. So a lot of the times this stuff can be really addressed soon if you just straight up ask them. So you need to know what to look out for here, and then you can straight out ask the client or the realtor, whatever the case may be. And now we're not wasting everybody's time and resources and energy. We can then identify the problem, and then we can get on the right path to solve that problem, as opposed to spending all our time going down the wrong road. Here's another thing that's going to come up: ownership problems of the property, aka title issues. Is there seasoning that's an issue? Are they trying to, refinance it as soon as they purchased it? That's going to be a huge issue. Is there, any type of other seasoning issues? Are we changing the title? A lot of people try to do a refinance and put a different person on title, right? Well, that's a purchase, right? That's not a refinance. So the property is changing ownership, right? Is title owned in a company? Or is it owned in a personal name, but it's trying to be switched to a company? You could get all the way almost to closing, and the person tells you, oh, I needed to close this in my in my company. And you're going, hey, that's not allowed for this program. You can't take ownership in a company. You can't take title in a company on a conventional loan or an FHA loan, or a lot of other non-QM loans may not allow you to, depending on what program you chose, what company you chose, what the guidelines say. So now you're pretty much all the way to closing. You got your clear to close or whatever, and they say, oh, no, I'm not putting it in my personal name. I'm putting it in my company. Or excuse me. Also, who's in the company, right? Even if you know that they're putting title in a company, who else is part of that company? How much do they own of that company? Are there any owners above 25%, which is usually, not always, but typically what a lender or what a lender is going to want. Typically, not always, but typically anybody 25% and sometimes 20% or more ownership is going to need to be on the loan, right? So now you have some other person who has no inkling or want to be on this loan, and now all of a sudden you have to have this person on the loan because you didn't properly identify any issues or problems that were going to come up. You didn't ask the client these things. These are all things that we need to be aware of, and we need to ask our clients when we are dealing with them, right? All of these questions. It doesn't have to be the first phone call, right? Some of this stuff is in our script for the initial phone call. Some of it's not. Some of it's going to be that next stage after you, have talked to them once or twice, after you've sent them a quote of some kind. A lot of this could be addressed before you send a quote, but some of it just isn't. Some of it's going to be addressed as you go through the transaction more. But these are all things that we need to be aware of. And I would say identifying the problems, because again, tomorrow we're going to talk about finding solutions. Wednesday, we're going to be talking about actually solving these problems and what to do after we solve them. So today's takeaway as far as identifying problems is not only should you know some of these common issues like credit issues, income issues, property issues, the state of the property, and ownership and title issues. These are just a few to make sure that are on your radar that can blow up your deal. But the takeaway from today is to ask. That's what I would say. The big thing is that not enough loan officers do. Just ask the question directly. Don't bounce around on why they were denied somewhere else, or just say, oh, well, you were denied there, but I can do it for you because I have all these other loan programs. Yes, we do. And that's something to discuss. But first, straight out ask them, why did they say that they couldn't do your loan at Wells Fargo or some broker that only has conventional loans or something? Okay, well, if they said that since you're 1099, and they can't do that with conventional, and it didn't work with conventional, and all they have is conventional programs at that mortgage brokerage, yeah, absolutely, we can solve that problem. But if they say there was property issues, or there was some issue with some open disputes on their credit, or if there were issues with seasoning, we need to know that right now. If they said, oh yeah, excuse me. If they said, Oh yeah, well that other lender wouldn't do it. They wouldn't give me the full cash out because I've only owned it for 2 months. Okay, well we need to know that because it's going to be the same thing with us, right? Except for we have one or two programs here and there that would allow zero seasoning or 3 month seasoning or whatever. But that's going to put us in a tiny little box of the only programs we can use, and we're going to have to really dive in to see if we can do that. So we have to just ask them straight out, okay, why did they deny you? And just get the actual answer so we can cut through all the stuff and just get to what we need to be talking about, right? Which is putting them in the correct program. Also, they don't need to dance around talking to you. There's a lot of clients that will dance around subjects because they don't want to tell you something, right? They don't want to tell you that they didn't file taxes, or that there was some issue here or there with their income or their taxes or their insurance or whatever it is. Remember, sometimes we have to just let them know, hey, I'm not the police. I'm not the IRS. I just need to know what's going on. If you didn't do your taxes, tell me you didn't do your taxes. If you took so many write-offs that you lost money on your taxes, tell me that. I'm not the person who's personally loaning you the money. I'm not the IRS. I'm not the police. I'm here to help you. It is us versus the world, right? Us versus the people who have the money. Us versus the underwriters. Us, right? We together, you as my client and me as the loan officer, are working as hard as we can to solve your problems. But what we have to do before we can solve those problems is we have to identify them. And I can't identify your problems if you're not honest with me and straightforward. And so sometimes it takes a little bit of, I wouldn't say coercing, but I would say a little bit of assurance to the client that you are always acting in their best interest. You are bound legally to be acting in their best interest. You are not the authorities of any kind. You just need to know. You need to know so you know what to look out for, so you can identify the problems and start finding solutions. So that is what we're going to be talking about tomorrow, is finding solutions to these type of problems that pop up. But what I would leave you with today is ask, talk to the client, interview the client. If you hear them talk about something like this, your ears should perk up and you should be asking more questions, and you should know those type of things that you're looking for. And this isn't everything, right? This isn't everything here in this presentation, but this is definitely a lot of the big ones to look out for: credit problems, income problems, property status problems, ownership problems, title problems. These are all problems we need to identify. Once we identify them, we can start finding solutions, which is going to be our training tomorrow. So I don't see any questions in the chat, so I think we can go ahead and wrap it up. Remember, 12 p.m. Eastern time. We do this every single weekday. This week is a short week because it's the holiday week, so we will do Monday, Tuesday, and Wednesday. As I said earlier, this week is essentially a series. Today we're going to be talking, today we talked about identifying problems. Tomorrow we're going to be talking about finding solutions to those problems. And Wednesday we're going to be talking about actually solving those problems and what happens after we solve those problems as well. So thank you everybody for tuning in. We'll see you tomorrow, 12 p.m. Eastern time, for the next episode of the Loan Officer Sales Training with the Mortgage Calculator.